Private money loans versus hard money loans, your guide to informed decisions. Welcome to Private Money Lender, your gateway to connecting with private money for your non-owner-occupied investments. As a private funding liaison, we provide tailored assistance to borrowers. Reach out to our dedicated team member at 310-940-8886 for personalized guidance on navigating the diverse opportunities within our private money lending services. Feel free to ask us any questions. We're here to help. Let's begin. Private money loans. Pros 1. Relationship building. Private lenders may consider personal relationships, offering more flexibility and personalized terms. 2. Negotiable terms. Borrowers can negotiate terms directly with the lender, tailoring the agreement to specific needs. 3. Diverse funding sources. Private lenders can include family, friends, or individuals looking for investment opportunities and diversifying funding options. Cons. 1. Lack of regulation. Private lending is less regulated, increasing the importance of due diligence to avoid potential scams or disputes. 2. Limited availability. Finding reliable private lenders may be challenging, and they may not be as readily accessible as hard money lenders. 3. Dependency on relationships. The terms may heavily depend on the borrower-lender relationship, introducing potential conflicts. Remember, I work closely with a network of 137 private lending investors, providing you with diverse funding options. Despite the cons, our collaborative approach ensures your journey is guided with transparency and trust. Feel free to reach out for more details or to discuss any concerns. Hard money loans. Pros. 1. Quick access to funds. Hard money lenders focus on speed, making them suitable for time-sensitive deals such as real estate auctions. 2. Asset-based lending. Approval is primarily based on the property's value, making it feasible for investors to acquire valuable collateral. 3. Specialized lending. Hard money lenders often specialize in certain types of loans, providing expertise in specific markets. Cons. 1. High costs. Interest rates can range from 8% to 15% or higher, significantly exceeding traditional loan rates. 2. Short-term nature. Most hard money loans have a term of 6 to 24 months, requiring swift repayment or refinancing. 3. Risk of property loss. If unable to repay, the lender can seize the collateral property. Comparison. Risk tolerance. Hard money, suited for those willing to accept higher costs for quicker access to funds. Private money. Ideal for borrowers who value personalized terms and are comfortable navigating less regulated spaces. Property type. Hard money. Primarily used for real estate investments with significant collateral. Private money. Offers flexibility for various purposes, including business ventures or personal loans. Due diligence. Hard money. Generally more straightforward due to regulatory oversight. Private money. Requires thorough research to ensure the legitimacy and reliability of the lender. Long-term relationships. Hard money. Often transaction-focused. Private money. This can lead to long-term relationships with individuals providing ongoing financial support. Choosing between hard money and private money lenders depends on your specific needs, risk tolerance, and the nature of your financial goals. Feel free to ask us any questions. We're here to help. Our success is your success. Partner with the nation's leading private money lending, and we'll guide and support you every step of the way. If you would like more information, visit our website at Private Money Lender or reach out to us by phone at 310-940-8886 or email at contact@privatemoneylender.com. Subscribe for updates and stay informed about exclusive opportunities.